My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. If you want to make friends, I'm just trying to save you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. I know it's incredibly easy to blame today's decline on the Labor Department's non-farm payroll number, saying it's too hot and it'll cause Jay Powell and Company, a.k.a. the Fed, to spike the economy even harder. But that would be wrong. Actually, dead wrong. It's not the reason the Dow dropped 249 points, S&P lost 1.63%, and certainly not the reason why the Nasdaq plunged 2.47%. The employment report didn't create any new angst. In fact, it's pretty clear that both job growth and inflation are peaking or have peaked, which is exactly what we need to do to wipe out inflation. We're on our way there. No, today's decline was all about earnings. If anything, that is actually more disconcerting to someone like me. Take Apple, which, you know, I always say you should own, not trade. Katie Huberty from Morgan Stanley, the most important Apple analyst, penned a report today saying that Apple could miss the quarter because of weakness in services. It's funny, yesterday I told the investing club that Apple's the stock in the charitable trust that I am most worried about. Good call. Not one I wanted to make, though. In Techland, there is some justifiable weakness, real justifiable weakness. And the downgrades can send chills down your spine, like the call to sell giant chipmaker Micron this morning, confirming what we said about a lack of business in China, along with a blurb from Elon Musk where he talks about a super bad economy and some big layoffs at Tesla. Suboptimal. So how about next week? Will it be continuation? I'm afraid it actually might be. First, in the interest of shameless self-promotion, I want to tell you we're going back to San Francisco, resuming our pilgrimage. I like to do it once a quarter to Techland. Oh, it's not just tech companies, but you know I like it out there because we have to take the temperature of Silicon Valley and because that's where so many interesting companies are. I think next week's going to start off rocky because even though Apple has its terrific Worldwide Developers Conference, my gut says the rest of the Apple analysts are going to have to catch up to Katie Huberty's newfound cautious outlook. I'm predicting a host of price target cuts, estimate cuts, and maybe even downgrades. China's real bad for Apple. Europe's weak, too, thanks to the Russian invasion of Ukraine. I mean, this shouldn't be a shocker. What matters, though, is you can't asterisk this one. Like I said last night, you can asterisk a lot because it's too big. But you can start buying Apple once the medicine is taken, because sooner or later, China will beat COVID and come back online. Hey, Starbucks opened 600 stores there in Shanghai. That makes me feel better. You need to be an Apple for that. But if you don't own it yet, you might as well wait for the estimate cuts and the downgrades before you get in. Most people aren't nimble enough to sell Apple now and then buy it back when the all clear is sounded. To me, it is worth riding out, even though I know I'm going to take a lot of pain, knowing that a better time will come ultimately, even if you have to play through this moment to get there. Hey, look, be my guest if you can sidestep it, though. If you think you can pull it off, God love you. Tuesday, Eli Lilly has a meeting to discuss its pipeline and address the value of its diabetes/weight loss drug called tirzepatide. I think it's a miracle drug, which is why we have a big position in Lilly for the Charitable Trust. But you got to be careful, though. See, Lilly's presenting the data this weekend, so it might be too late to take action in the stock. You better wait for a pullback. So, in other words, if Lilly goes up into this, remember, we already heard good news there. So you're not going to be surprised, and what's going to happen is your buying is going to be met with sellers who are saying, I'm selling the news. Next, the most unnerving part of the Fed-mandated slowdown is that the food stocks haven't been a great place to hide. They usually are. But their costs are way up. Think about it. The food it's in it, the can, the plastic, whatever. And they can't do much more to raise prices without starting to really turn off people. And that's why it'll be a good test of the market's mood when one of the strongest, J.M. Smucker, reports. The company's energized, has put up some very good numbers of late, but it doesn't matter. See, you could have said the same thing about Hormel, and it's been clocked on its ugly earnings. And by the way, it took the whole group down, Smucker included. Take a look at the chart. It's almost like it looks like Hormel. I wonder if we can get a reversal when the excellent food company reports. I don't care for the group. But look, if we see a reversal in Smucker, that tells you all is not lost for the packaged food sector. It also probably make me like General Mills more. Everyone's so upset about gasoline prices. But if you really want to see the impact, you got to listen to the Cracker Barrel call. Because these guys always tell it to you straight, and they are right on the highway. If they indicate that the consumer's cutting back on spending and not, say, getting the apple pie a la mode any longer, by the way, give you a slice of cheese, make a mental note of that, then, we should be worried. As loathsome as higher energy prices are, we do need to see some demand destruction if we're going to slay the monster that is inflation. Can you imagine rooting for all these negative things? It gets me down, but we got to soldier through. Hey, you want more about the impact of gasoline? Let's see what happens when Thor Industries reports on Wednesday. Thor makes those giant trailers you see on the road, motorhomes, whole shooting match, including Airstream. These things use a lot of gasoline. Again, if you're on inflation death watch, this conference call is a must because the company's very well run. So it won't be their fault if the numbers are weak. Campbell Soups had a tough time of it simply because there hasn't been any catalyst. Actually, there hasn't been any catalyst to any of the food stocks except for Hershey, and that's only because cocoa is such a rare commodity that it's actually still cheap. That said, I mean, I don't understand why it's so cheap, but it is cheap. That said, you can do a lot worse than getting a more than 3% dividend in a stock that's up 5% for the year. I like Campbell Soups management. I bet the stock can work its way higher because management's taking the tough action to beat the numbers. And they do have, by the way, a pretty good panoply of products. The most beloved chain these days is Five Below, and I think it won't disappoint. It's right up there with the dollar stores, which have been proven winners in a slowdown. More on that later. Five Below's got a good concept, good management, good stock. Thursday, AMD has an analyst meeting. This will be the first time the redoubtable CEO, Lisa Su, can tell us about how her new chip company, because it also has made a couple acquisitions, is doing. I want to hear about the synergies from the recent Xilinx acquisition. Huge position for the Travel Trust, which I talked about in yesterday's conference call with club members. And remember, people hate tech right now. This thing can go back to 93, 95 in a heartbeat. But you probably want to buy it if it does. We've got Signet Jewelers reporting Thursday morning. I suspect the string of strong earnings is going to continue. Stock sells at just 5 times earnings, and that means that the market has spoken, telling us that the company stock isn't worth owning because the earnings estimates can't be trusted. That's what happens when you see that shrink in the multiple. 5, it means that something's worried. People are worried. Now, I actually disagree. I think that Signet's good, but I think you have to be patient. I don't know how many great numbers CEO Gina Drosos has to put up before people trust her, but I think she'll deliver a great print again. How about these companies that become pandemic plays? Remember those? We don't talk about them anymore, right? DocuSign, they reported for close Thursday. See what they tell us. I think Stitch Fix can be regarded as a COVID stock, too, and I bet their business at DocuSign is good and okay at Stitch Fix, but it doesn't matter. They're running in place. They're going nowhere. Really painful. Hey, we know that high-end retailers are worried, as we found out from Gary Friedman last night on his RH call. Gary's really just, he's perturbed, thinks there's going to be a slowdown. He's cutting numbers. He said his revenue's going to be -1, -3. Why don't we listen to what the good people at the similarly high-end Vail Resorts tell us on Thursday night? They're usually very upbeat. Have they changed their tune? That'd be worth knowing about. Next, this inflation watch must be boring to you by now. I don't care. I get that. But this is one of those times where until inflation is whipped and crushed, there'll be more rocky days like today. So how can we not focus on it? But we get the consumer price index on Friday. I can only use the cliche closely watched to describe it. Be mindful. Right now, this data really does matter. Oh, and here's an oddity. On Friday, we get the University of Michigan Consumer Sentiment Index. You know what we need to hear? Gloom. Because gloom means less spending, which, again, pleases Jay Powell and company. Although he's not a downer guy, but he knows he's got to get things rolling on the deflation front. The bottom line, I know it's a total drag to hope for negativity, but that's what we need right now to kill inflation. I bet we'll find that confidence is falling rapidly. And that's exactly what the Fed doctor ordered to get to this scenario from an inflationary one to one of falling prices. So needed to preserve your purchasing power and your portfolio. David in Florida. David.
Booyah, Cramer.
Booyah, what's up, man?
Well, I know how much you absolutely like stocks that make a lot of money. Question is, based on their trend of earnings reports, does Procter & Gamble make that threshold?
Absolutely. Absolutely, 100%. And I've got to tell you something. This company's not getting respect right now at 145 with that dividend aristocrat, and I think prices could be falling in some of the commodities that they buy. I think this is a good one. Travel Trust buying it. Tried to buy some more the other day. We had talked about it. I'm looking for 142, 143 entry point for even more stock. Al in Connecticut. Al.
Booyah, Jim.
Whoa, man.
Thanks
you
for
come to
taking
play.
My call, man.
What's going on?
Regeneron's acquisition of the rights of Libtayo was not well received by the market and is now bumping up against the lower end of support. Do you agree with CEO Schleifer?
Look, I talked to Len Schleifer.
I
I talked with Len yesterday. You know, I've known Len since he was their first guest on the show. Stock was at 5. Take a look at it now, 630. I think Len was justified. He bought it from Sanofi, paid $1 billion for it. They obviously know something. George Yancopoulos, who is the guy who really is the chief scientist, Yancopoulos is so amazing that if he thinks that's worth a buy, I think it's worth a buy. George is money. Gary in Maryland. Gary.
Booyah, Jim.
Booyah.
I watch the show every day, and I really like it. It's really good.
Thank you.
Jim, the stock I'm applying, Caesars Enterprises, their high was 135 a year ago. Now they went down to 42. I kept the rate of 50. I'd like to know, in your honest opinion, should I keep it? Buy
They
it,
don't make
or
any
I'm
money. They don't make any money, so they're not on my list. I do think that, look, I got stung. The charitable trust owns win. We did a bad job on it. I owned up to it yesterday at our conference call. You should go listen to it because it really is me donning the hairsuit. But I don't want to be in that group. By the way, Vici Properties, which is connected with them, stocks up big after hours because out of the S&P along with Keurig, Dr. Pepper, and On Semi. Both On Semi and Keurig have been two stocks we've liked very much here. I consider myself a pretty positive person, but we do need a little negativity to kill inflation. And I bet next week we'll find that the confidence is dwindling. And unfortunately, that's exactly what the Fed doctor ordered. They got to do it. Oh, man, tonight, in the face of a volatile market, one of the most important things you can do for your portfolio is to be diversified. So that's why we're playing MI Diversified. Then some retail earnings last week were actually pretty good. I'm going to cover the ones that I think deserve a little extra attention because the stocks have gotten cheap. And ArcBest is on a mission to solve a struggling supply chain. I'm going to learn more about their plan with the company CEO. Hey, we made a lot of money with XPO Logistics, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.